G'day everyone, welcome back to Pete's Investing. Today is April 1st, 2023. This is the spot silver price update. First off, we're looking at the daily, the 4 hourly and the hourly, and just looking at the CCI 1500 with a moving average 400. You can see here on all time frames, we're in a bullish momentum. So potentially taking long trades only and avoiding short trades. Let's drill down each of these and to see how these time frames are behaving. So on the daily chart, first off, we can see here it's I've drawn these diagonal support lines, so resistance and support lines, and also these two blue and red support resistance lines, and it's currently in this range on both of those lines. It's only just broken out of the descending diagonal trend line in the last day of trading, so that's a bullish, obviously a bullish outcome so far, and we need to see it break above this key resistance area to be more confident about going long. Also, just a bit of a trading note, we do primarily use the CCI 1500 and the moving average, and that closely aligns with the moving average 200 of the price chart, although the main difference is it normally gives us an early exit. So for example, here the moving average broke to the downside, and so did the CCI 1500 below its moving average, but notice the CCI 1500 stayed below the moving average, so during that period you would not have taken any long trades, whereas the moving average 200 of the price chart showed potential long trades above the moving average. So again, just a thing to note, you could have traded these on the smaller time frames, but just be mindful of taking action like that. Also, nothing to note is in terms of Fibonacci retracements, between that high and that low on that Fibonacci retracement level, you'll notice whenever the price breaks the trend and it goes beyond the 61% retracement like it did here, that's usually a change of trend direction. So had it bounced, normally what happens when on a downtrend, in this example, if the price bounced to the downside from the 50 to 61% or even lower, that would have been a continuation of the downtrend. But as soon as it breaks that range of the 61% and does that, it generally means it's a break of the trend. So here it's broken to an uptrend. You can see back here, just eyeballing it, the retracement from there to there, that was beyond above the 61%, and just to prove that, I'm not telling fibs, draw a Fibonacci retracement. You can see there it came back on a 50% exactly, and you can do that same exercise for most of these scenarios. Let's go to the 4-hour chart. Now again, just zooming out for a moment, you can see the similarity between those diagonal trend lines, but also the support and resistance lines. And also we're in a uptrend with the CCI above its moving average. Now you'll notice I've also previously drawn this ascending diagonal trend line as well within this range, and you'll notice the price has gravitated back towards that trend line, but it's also broken above this diagonal descending trend line as well. I've also done a Fibonacci extension here between that range and the pullback, and that key resistance area we spoke about earlier is hitting that 123% extension, so just be mindful of that. We want to see it break. It may possibly bounce from here, or it may bounce from that red resistance area. Lastly, let's look at the hourly chart. Again, not much really to talk about here except for the fact that it's still in an uptrend, and the way you would trade this typically, there's various entry parameters you could use, and I've got some videos in my strategy playlist that show some of those, but one strategy you may want to use is the fractals. Now this looks a bit busy, but I'll just drill down on this. So from here on, you would have avoided taking long trades during this downtrend, even though the daily and the 4 hourly may have been in an uptrend, but you would have taken predominantly long trades from that point on. So let's drill down some of these, give you a bit more examples of how they work. So from here on, you can see there, that would have been a perfect, that line above the bars there, the candles, that's the fractals, that's the upper fractal and the lower fractal. So when you're in an uptrend, you trade when the bar breaks above the fractal, which you did on that bar there. And what I've done here is I've also drawn a blue line, which is basically a target. So you would have and this is because we're trading on the hourly chart, I've put a 1% target in there. You can put a 5% target or whatever percentage that suits your trading strategy. But on that one, you could have possibly gone long on that hour, and you could have exited a number of ways, whether it's a moving average change or percentage gain or monetary gain. But this is just one exit strategy using a percentage of 1%. Avoid going long, for example, in the second, third or fourth candle, because typically you want to go long on the initial break above the fractal. Like in that case, another area you would have avoided going long in all of these. You would have gone long at that one, just broke above the fractal there, and that would have been your target, and you would have hit your target at that point there. Avoid going long there until that candle there, and that would have been your target there, and you would have gotten out in the next hour with a 1% gain. And you wouldn't have gone short in any of these positions. So very typical example of trading using the fractals. So I'll just get rid of that to make it a bit clearer. So you can see there we're still in an uptrend, and all three timelines are showing bullish momentum. So in summary, basically just beware, we may see a bit of a bounce from this key resistance area at 24.63, but primarily take long trades and don't take any short trades. Even if it bounces to the downside, wait for a rebound to the upside and make sure the hourly is also in alignment before taking any further trades. To understand how to properly trade using the average down process, reference the links in the description below. Subscribe and like the video, and we'll see you in a future video.